Hello everybody, how are you? I hope all of you are really good. So welcome to KSJ Teaching. I'm your friend, your mentor CS Saurav Jindal, welcoming you all to the revision sessions of financial management for November 2023 attempt. So as promised, we are going to start with the revision sessions, and the first chapter, these are going to be the in-depth revision of all the concepts, plus we'll be solving the RTP also, current attempt, that is for the November 2023, the RTPs which have been released by the ICAI, will be solving that also, right? So, and some examples I will be taking up, the practical examples in between the topics wherever as per the requirement. But as such, the practicals, if you ask me that, sir, please do it from the ICI module, no, we are not going to do that, because for that we already have a separate series, right? So you can join it from there, from our mobile app, where we have covered each and every question in detail of the ICI study mat. Okay, so let's get going. The first chapter that we are going to start with is working capital management. Now, in the working capital, we can divide this chapter into various parts. One is the estimation of working capital, then is the cash management, then is the debtors management. So what we are going to start with is the first topic, that is estimation of working capital, right? Okay, so let's get going. We are going to take approximately 2 lectures for working capital, because some topics, some technical topics will be there, right, where we'll be going in depth. Every concept, we are not going to really rush through it. Every concept, we'll try to understand what that concept means, because if you are able to understand the concept, then definitely you can apply that concept in the examination and try to solve the questions. And obviously, sir, what about the test series? This is a very common question that has been coming up. Please wait for a few days for the test series. I will be announcing in these lectures itself, in the revision session, so you have to attend each and every session. And if you have not yet subscribed to the channel, subscribe it, press the bell icon, and share with all your friends, because this revision session is definitely going to be really helpful. Okay, so let's get going without wasting any moment. Let's get going. Like the video. What is a working capital? So if we are studying about the working capital management, management means to manage something. What is to manage here is working capital. So the first question is, what is a working capital here? Right, so what is a working capital? Please keep making the notes side by side, right? So I'll write a few things. So I say working capital. So I'll keep writing a few things, right? Working capital is the money required in the business. What is capital, sir? Capital is any money that is required for the business. So what is working capital? Working capital is the money required. Working capital is the money required for a period of less than equal to 1 year, right? So the first thing, the first feature of working capital is it is the money that is required in the business for a period of less than 1 year. If it is more than 1 year, it is a longer period, then it is not known as working capital, right? And why this money is required? And this money is used for meeting day-to-day expenses. This money is used for meeting day-to-day expenses. Please keep writing, keep making these notes, because this will help you a lot in the revision part, right? This will, when at the last moment also you want to revise this chapter, you can easily revise it from these notes, right? So what is working capital? It is the money required for a period of less than 1 year, and the money is used for meeting the day-to-day expenses. So how there is an equation related to working capital. If you talk about working capital equation, what is that working capital equation? That says working capital is equal to current assets. Working capital is equal to current assets minus current liabilities. Current assets minus current liabilities, right? What is the current asset, sir? What is your, if you talk about current assets, what is the current asset? Current asset is cash and cash equivalents. Cash and cash equivalents. You all know what is included in the current assets. Debtors are there, inventory is there. Any item, what is a cash equivalent? Cash equivalent means any item which can be converted into a cash within a period of less than 1 year. And current liability is any payment to be done within a period of 1 year. right? What is the current liability? Any payment to be done within a period of less than 1 year, within a period of less than 1 year, right? That is the current liability. Now, working capital says that if you have to pay someone, that is a current liability, you should have more money in your pocket. For example, if you want to pay someone 1,000 rupees, and if you have 1,000 rupees in your pocket, now after paying the current liability, what will be the amount that will be left in your pocket? The amount left will be 0. Now, how will you meet your day-to-day expenses? No, sir, you will not be able to meet your day-to-day expenses. Now, if you have 4,000 here, after paying 1,000 rupees, what you will be left with is 3,000. Now, with this 3,000, you will be able to meet your day-to-day expenses. This 3,000 is what? This is your working capital. That is the amount that is left in your pocket after paying off your current liabilities, and with that amount you will be able to meet your day-to-day expenses. That is what is known as working capital. Clear? This is a very simple language, that after paying off your current liabilities, something should be there in your pocket so that you are able to meet your day-to-day expenses. Let's take a very simple example. Another example, sir, you have 10 lakh rupees in your bank account and you want to buy a car. You go to the showroom, you select a car worth 10 lakh rupees, right? Obviously, you will select a car within your budget. Now, within your budget of 10 lakh rupees, you have selected a car. You pay the whole amount by a check of 10 lakh rupees. There is exactly 10 lakh rupees in your bank account. You have purchased a car of 10 lakh rupees. That means you have emptied your bank account, right? In your bank account, what will be the balance? The balance will show 0. Now, how will you be able to meet your day-to-day expenses? Sir, food is there, clothing is there. How will you eat the food now? You don't have money left in the bank. Sir, we have money in our pocket. That's a separate thing, right? But for meeting the day-to-day expenses, there can be some day-to-day emergencies also. For meeting the day-to-day expenses, there should be some money extra lying in your pocket after paying off the current liabilities. After that, the next thing that we have is, the next what we say is that, okay, working capital shows what? Sir, the working capital shows the liquidity of the firm. Shows the liquidity of the firm. That means, what is meant by liquidity of the firm? Sir, the liquidity of the firm means that in case of any requirement, in case of any emergency, in case of any requirement, do the company has enough funds, enough liquid funds to pay off their expenses? In case of any requirement, do the company have enough funds to pay off their requirements? Right? More the working capital, more will be the liquidity. So what we say, that more the working capital, more will be the liquidity of the firm. More will be the liquidity of the firm. Right, sir? But one more important point regarding the working capital. Sir, we say the working capital should be just sufficient. What I'm saying is that amount of working capital, amount of working capital should be just sufficient. What is meant by just sufficient, sir? The just sufficient means that it should not neither be in excess nor in the shortage, right? So it should neither be in excess, right, nor in shortage. Sir, why? What will happen if we have excess of working capital? Sir, if we have excess of working capital, that represents the opportunity cost. That represents the opportunity cost, because, for example, if you require 1,000 rupees and you have 1 lakh rupees as working capital in your pocket, does it make sense? No, sir. Why? Because you can deposit the excess money in the bank and you could have earned interest on that, but you are losing out on the interest because you are holding 1 lakh rupees in the form of cash with you, right? You could have invested that 1 lakh somewhere, keeping 1000, or as per the requirement you can keep, if you need 1000 you can keep 5000 rupees, right? The remaining 95000 rupees you can invest somewhere and you can get a good return on that, isn't it? So there is opportunity cost if you are holding the excess of working capital. And what will happen, sir, in case of shortage? Obviously, sir, in case of shortage, you know, you will not be able to meet your day-to-day expenses, right? So in this case, you will have difficulty in meeting day-to-day expenses, right? So this is what the difficulty that you are going to face, right? So that is why we say that the working capital should be just sufficient. Okay, let's continue. The next topic that we have is types of working capital. The next that we are going to say is, if we talk about the types of working capital. So all this is the basic, the background of working capital that we are building up, right? That is important for revision purpose. Types of working capital, we can divide it into two parts. The one is on the basis of value. One is on the basis of value, and the second one is on the basis of time. On the basis of time, right? So this is further classified into two parts. We can further classify it into two parts. On the basis of value, the one that we have is gross working capital. The one that we have is gross working capital, right? And the second one that we have is net working capital. Net working capital, right? So what is a gross working capital? The gross working capital is where we see it from only one angle, that what is the amount that is there in our pocket, right? So that means this gross working capital is focused only on current assets. The net working capital is where we see that after paying off our current liabilities, after paying off the someone to whom we have to pay, after paying off the current liabilities, what will be the amount that will be left in our pocket, right? So this is current assets minus current liabilities. This is your net working capital. And normally we calculate the net working capital because we wish to know that after paying off someone, if we have a liability to pay to someone, after paying off to someone, what will be the amount that will be left for meeting our day-to-day expenses. That is why normally we calculate net working capital. Clear? Okay, let's move forward. On the basis of time, what is there on the basis of time? On the basis of time, we have permanent working capital. The one is the permanent working capital and temporary working capital. Permanent working capital and temporary working capital. The permanent working capital is the amount of capital, that is some minimum amount of capital that is always invested in the business, right? So permanent is the minimum amount of working capital, the minimum amount of working capital always invested in business, always invested in business. Right? So what is temporary working capital? The temporary working capital is when you are raising the working capital or when you are getting the working capital for a temporary period, right? There is a sudden requirement. For example, if you are getting a pocket money, right? Normally you get 10,000 pocket money every month, right? That is the minimum amount that you always have. But during your birthday month, because you want to give party to your friends here, you get extra 5,000 as pocket money from your father. Isn't it? That extra 5,000 is what? This is your temporary working capital that is required for a temporary purpose, right? So this is working capital required for a temporary period. Working capital required for a temporary period. right? So this is regarding the types of working capital. Now next comes very, very, very important topic, that why there is a need for working capital. Till now we have studied about that what is the working capital, right? Now comes the very important topic. From which point of view? From the practical point of view also, that sir, why there is a need for working capital? Why are we studying this particular topic? Right? So here we say why there is a need for working capital. Need for working capital. What is the need for working capital, sir? Can anyone think of? Yes, sir, we have already studied, sir. We have already studied, but it's okay. We have to do the revision. So why we need working capital? जरूरत क्यों है working capital की? Because of the existence of operating cycle. Need है. Why? Because of the existence of what? Existence of operating cycle. One second. Because of the existence of operating cycle. Sir, what is this operating cycle? Now the big question is, what is this operating cycle? Let's try to understand with the help of an example first. For example, you are a CA student, right? I'll take your example only. You are a CA student. Is this course absolutely free? No, sir. You will have to pay a fee for it, right? Let's say the fee for the whole course is 1 lakh rupees. This is the fee that you will be paying for whole course, and you have paid this, paid on 1st of April 2023. Any year you can take it, right? You started with this course. Now, my question is, when are you going to recover this 1 lakh rupees? My question is, when will you recover? When will you recover this rupees 1 lakh? Sir, when will you recover this? Sir, you will recover this money only when you become a chartered accountant. Now, let's say you recover this money on 1st of April 2028. That is when you become a full-fledged chartered accountant and you start your practice, your own practice, or you start with your job. Any kind of a thing, that is any situation. You will recover this 1 lakh rupees that you have invested in this course. You will recover it when you will start earning. When will you start earning? Once you become a chartered accountant. Let's say you become it on 1/4/2028. You get your membership. You join a company, right, as a chartered accountant, and you are getting 1 lakh per month as the salary, right? A dream salary, sir. 12 lakh package, isn't it? So what will happen, sir? What will happen during this period? What is this period, sir? What is this period of 5 years? Sir, during this period of 5 years, do you need money for meeting your day-to-day expenses? Isn't it? During this 5 years, obviously, sir, you will require money for meeting the day-to-day expenses. This 1 lakh rupees was there in your account. You have invested that 1 lakh rupees in the course. Then what will you do during the 5 years? Are you going to stay hungry during the 5 years? Sir, we are really dedicated for this course. We will stay hungry. That's totally fine. Is it so? Or no? Can you stay hungry for the 5 years because you want to complete this course and you only had 1 lakh rupees? No, sir. Isn't it? Nobody is going to stay hungry, sir, whenever we are studying. But this is a fact. This is a fact that I am talking about, that whenever we are studying, especially a tough course like chartered accountancy, whenever we are preparing for the examinations, our hunger doubles, isn't it? Okay. So during these 5 years, you will need working capital. You will need working capital, right, for day-to-day expenses. For day-to-day expenses, isn't it? You will need working capital, sir, definitely. Now, what is this 5 years, sir? This 5 years that we are representing, that is the time period from the time you have invested the money till the time you are going to recover that money. This 5 years is known as your operating cycle. right? This is the period that is called as operating cycle, and definitely, sir, you need money during this operating cycle, right, for meeting your day-to-day expenses. Otherwise, you will have to stay hungry, right? So this is the need for working capital. Sir, that's it? No, that was just an example. That was just the beginning of the topic. Now let's see. The operating cycle can be for a trader or for a manufacturer. If we talk about the operating cycle, we can study it from 2 points of view. One is from the viewpoint of the trader, and the another one is from the viewpoint of the manufacturer. Right, the trader one is very simple, sir. The trader one is extremely simple, and the most important one is the manufacturer point of view. So let's see first from the viewpoint of trader, right? So what we are going to see is the operating cycle for a trader. Now, what is the trader doing, sir? Trader will buy the goods and trader will sell the goods as such, right? Trader is not doing any extra process on the goods before selling the goods. Trader is what? The trader is buying the goods as such, selling the goods as such, right? This is what a trader does. So what is the operating cycle of a trader? If we talk about the operating cycle of the trader, let's say on 1st of April, this trader, there is a particular trader, XYZ trader, right? He buys goods worth rupees 10 lakh. Now just imagine a situation. Sir, is it possible that he is going to sell this 10 lakh worth of goods on the same day and recover the amount? On 1st of April, he has purchased the goods and he has paid from his pocket. He has invested 10 lakh rupees. He has paid for the purchase of those goods. But imagine a scenario. Is it really possible that he is going to sell all the goods on the same day? वो सब कुछ एक ही दिन में बेच दे सर. 10 लाख का वो लेकर आया था, 10 लाख का 10 लाख एक ही दिन में बेच दे. That is not possible, right? So what is the situation here, sir? These goods are sold over a period, let's say over a period of 9 months till 31 of 12, right? He has sold all goods worth rupees 10 lakh, right, and recovered money. And he has recovered the money also. That's great, sir. Now what will happen? He invested on 1st of April, right, but he is going to recover it on 31st of December. That is, now what happens during this period of 9 months, sir? Now what will happen if you talk about this 9 months period? What is this 9 months? This 9 months is the operating cycle. This 9 months is the operating cycle for this trader, and during this 9 months, obviously he will require what? He will require working capital to meet his day-to-day expenses, because he has already invested a huge amount here, which is going to be recovered after a period of 9 months. So during those 9 months, he require the money for meeting his day-to-day expenses, right? So this 9 months is what is known as operating cycle, right? So this was operating cycle for a trader, which was comparatively a simpler one. Now coming to the next one, that is operating cycle for a manufacturer. The next topic is operating cycle for a manufacturer. Now what will happen in this case, sir? If we go for operating cycle for a manufacturer, what will happen in this case? Now, there are various steps which are involved in this. What are the steps? Write down the steps first. The first step is the manufacturer buying of raw material. The manufacturer will obviously purchase the raw material, and for the raw material, he will have to pay to the supplier, right? So the first step is the buying of raw material, right, and payment to supplier, right? The second is raw material put into process. Right? See, all those who have already studied from me, the live batch, there will be a few students who studied the live batch, just recently concluded a few days back only, right? You people must be having all these notes with you, right? You just have to concentrate on understanding and revising the concept. The others can write it down as per your wish, right? So raw material put into process. What is this raw material? When the raw material is put into process, this is known as WIP, right? The next is, now the WIP will be converted into finished goods. WIP converted into finished goods, right? WIP being converted into finished goods. Okay. After that is sale of finished goods. Sale of finished goods and receipt of money. And receipt of money. Now, what we are saying is, we are saying that the operating cycle for a manufacturer is dependent upon these things, right? The operating cycle for a manufacturer is dependent upon these parameters. These are the transactions that are happening in the books of the manufacturer regarding the raw material, and then converted into WIP, then WIP into finished goods. So these are the transactions which are taking place in the books of a manufacturer, and how to identify the operating cycle now from here is a task, right? So for that, what we are going to take up is, we are going to take up the different scenarios here. Okay, sir. What is scenario number one? The scenario number one is that on, what is scenario number one? The scenario number one says, one second. Yes. Scenario number one says on, let's say on 1st of April. What happened, sir? On the 1st of April, there was a manufacturer, he purchased raw material of rupees 5 lakh, right, and paid to supplier, right, paid to supplier. Clear? So on 1st of April, he has purchased a material, and on the same date, as soon as he purchased it, he has paid it to the supplier 5 lakh rupees. Now this raw material is lying in the store. This raw material arrived in the factory. This raw material is lying in your store. Now what happened? The next, on 30th of April, this raw material which was lying in the store, RM issued to WIP. That is on 30th of April, this raw material which was purchased on 1st, that is a month back, which was lying in your store, on 30th of April, this raw material has been issued to the production. That raw material, go to the production. Now this raw material will take time to be converted into finished good. Obviously, sir, this raw material is not going to be converted into finished goods like this, isn't it? This is not something a genie that it is going to be converted like this, just this and converted. No, sir. Let's say that it took a period of 1 month approximately. It took a period of 1 month, that is on 31st of May, that this WIP was converted into finished goods. WIP converted into finished goods, right? Now, when the WIP has been converted into finished goods, these finished goods are lying in your factory godown, right? These are not yet sold. These are lying in your factory godown. Now, what will happen, sir? It will take some time for the finished goods to be sold. Obviously, it is not possible that as soon as they are ready, they are going to be sold. No, sir. It will take some time. You will do some advertising. You will, ask your friends or ask your debtors or whomsoever you have been dealing with to buy the goods from you, right? So let's say after a period of 1 month, on 30th of June, this sale of FG, sale of finished goods, right? And that is what? That is the cash sales. That means you have not done any credit sales, right? Now just focus on the things one by one. Sir, you invested the money on which date? You invested the money on 1st of April, right? When you have purchased 5 lakh rupees worth of goods. right? And when are you going to recover that money? Sir, you are going to recover that money at this stage on 30th of June. When you will convert that raw material into finished good, you will sell that finished good, you will receive the money from the debtors. You have recovered this 5 lakh rupees on 30th of June. So what is that? Sir, this total is what? This total is your operating cycle. This is what is your operating cycle, right? Now I'll divide this operating cycle into small parts. What? Sir, I will say this is P1. P1 is for 30 days. What does this 30 days represent? This 30 days represent the number of days for which the raw material was received in the factory, but it was lying in your store, right? The P1 represent the 30 days. The first 30 days is what? The raw material storage period. That means the raw material is stored in your factory. It has not been issued to WIP, right? The next, I'll represent it as P2, another 30 days. What does this 30 days represent? Sir, these 30 days represent the period when this investment is in the WIP process, right? It is neither a raw material now, it is not a completely finished product now, it is in the WIP. We call it as WIP holding period. That is the time period during which the product is in the making. The raw material is in the process of being converted into finished product, right? It is neither a raw material now, it is not a finished product now, it is in the process of being converted into a finished product. Now the next P3 another 30 days. What does this 30 days represent? These 30 days represents the period during which the finished goods are ready but they are not yet sold, they are lying in your godown, right? So what is the operating cycle here? If I talk about the operating cycle here, if I talk about the operating cycle here, the operating cycle is P1 plus P2 plus P3. That is, it is a combination of 3 different periods. One, during which the raw material is stored in the factory, it is not yet issued to the production. Number 2, when it has been issued to the production but it is not yet converted into finished product. Number 3, when it has been converted into finished product but not yet sold, right? So it is what? It is 30 plus 30 plus 30. This is 90 days. Now for these 90 days, you require the working capital to meet your day-to-day expenses. Clear? Any doubts in this particular part? Now coming to the second scenario. This was the first scenario we have. Now coming to the second scenario. See, with these scenarios, it is easy to understand how the operating cycle is working, right? So second scenario, on 1st of April, what you have done is the similar scenario we are going to take, right, with a small twist. Purchased raw material of rupees 5 lakh, right, and paid to supplier. That means you have immediately paid it to the supplier. You are not taking the goods on credit, right? After that, the goods arrived in your godown. It is lying in your store. On 30th of April, raw material issued to WIP, right? So on 30th of April, this raw material has been issued to WIP. Next, for the next 1 month, it was in the process. On 31st of May, this WIP converted to finished goods, right? Now the finished goods are again will be lying in the warehouse. On 30th of June, sold goods on credit. Now this is not cash sale, sir. This is a credit sale, right? Obviously you will give the credit period to the people, right? You are saying okay, pay the money later on, it's okay. So on 31st of July, there is receipt of money. This is the receipt of money from debtors. Now what happened, sir? Sir, you invested the money on 1st of April. When have you invested the money, sir? You have invested on 1st of April. When are you going to recover that money? As soon as you have sold the goods, or when you receive the money from the debtor, sir, you are going to recover this amount of 5 lakh rupees when you will receive the money from the debtors. You have sold the goods, still the money is not there. So how can you say you have recovered 5 lakh rupees? No, sir. If your debtors do not pay, they refuse to pay you, will you be recovering 5 lakh rupees? No. Right? So when are you going to recover that 5 lakh rupees? Only when you will receive the full money from debtors, right? So this period now is your what? This is now your operating cycle. Now this period is your operating cycle, right? So this operating cycle, again, we'll divide it into various parts. P1, 30 days, when the raw material is, you have purchased it and it is lying in your store. P2, 30 days, when it is in the WIP, right? It is in the process of making. P3 is 30 days, another 30 days, when the goods are ready, but they are lying in your warehouse awaiting dispatch. Right? Now here we are adding P4, another 30 days, another 30 days. This 30 days represents that you have created your debtors, right, by selling the goods, but you have not yet received the money for these 30 days. Now your operating cycle has increased by 30 days. What is going to be the operating cycle here? What is going to be the operating cycle here, sir? Operating cycle here is P1 plus P2 plus P3 plus P4, right? So that is 30 plus 30 plus 30 plus 30, that is 120 days. Clear? So this is scenario number 2, when you have the credit sales and the amount that you have invested on the raw material in the beginning, you will be recovering that amount only when you will receive the money from debtors, right? When are you going to recover that amount? Only and only when you are going to receive the money from the debtors. The next scenario, let's come to the third and the last scenario, sir. Finally, sir, last scenario. Yes, the last scenario, sir. What is the last scenario? The last scenario says, on 1st of April, purchase of RM, purchased raw material of rupees 5 lakh on credit. Now you have not yet paid to the supplier, sir. You are buying it on the credit. You will pay to the supplier after 1 month, right? So what we are saying is, here, let's say on 30th of April, 30th of April, payment to supplier, payment to supplier, right? Then again, next, let's say this material was lying in your store. This material was received here, but it is lying in your store and it has been issued on 31st of June, right? On 31st of May, sorry, not June, 31st of May, sir. RM issued to WIP. Then on 30th of June, 30th of June, one second. On 30th of June, what we have is WIP converted to finished goods, WIP to FG. Then on 31st of July, what we have is, we have credit sales, and on 31st of 8, what do we have is the receipt from debtors, right? This is the receipt from debtors. Now what happens, sir? Now what is happening in this case? Sir, when have you purchased the raw material? The raw material is purchased on 1st of April. That's perfectly fine, sir, right? But when are you recovering the amount? The amount being recovered on 31st of August. Now let's divide the operating cycle period wise. What is the P1? The P1 is the period for which the raw material is lying in your store and it has not yet been issued to WIP. What is that period? This period. This is P1 is equal to 60 days here, right? The material is lying there in your store, but it has not yet been issued to WIP. Clear? Now this is P2, 30 days, right? P3, 30 days, and P4, 30 days, similar to the last scenario. But here we have another scenario, sir. The another scenario is this scenario P5, that is 30 days. What does this P5 represent? The P5 represents the period of the credit allowed by the supplier. Now, what is your operating cycle in this case? What is your operating cycle in this case? How will you identify your operating cycle? Your operating cycle is P1 plus P2 plus P3 plus P4 minus P5. 60 plus 30 plus 30 plus 30 minus 30, right? So that comes to 120 only. Now, what does it represent, sir? Why are we subtracting this P5 period, the credit being allowed by the supplier? Because, sir, from our pocket, when is the amount being invested? Sir, from our pocket, the amount is not getting invested on 1st of April. From our pocket, when is the amount getting invested? Sir, this amount is getting invested on 30th of April. Right, so that is why we have reduced the operating cycle, this 5 lakh rupees during this period of 30 days or 5 days. It is still in your pocket. You can use it for any purpose, right? You have not yet invested. In the earlier cases, we were investing on the same day. Here, for the 30 days, that is not an operating cycle. During those period, the 5 lakh rupees is still there in your pocket, which you can use it for any purpose. That is why this P5 is the credit allowed by supplier, right? Okay, so this is about the operating cycle, that how do we identify operating cycle, sir, right? So the next topic is the components of operating cycle. From here itself, we are going to frame what are the various components of operating cycle, right? So what are going to be the various components of the operating cycle? That is, the first is P1. The P1 represents R, right? R is the raw material storage period. R represents the raw material storage, or what we call it as raw material holding period also. Storage or holding period, right? This P1 is represented by R, P2 is represented by W, right? WIP is, this is represented by the WIP holding period. One second. This is WIP holding period, right? That is the period for which the goods are in the process of making, right? The goods, the raw material is in the process of being converted into finished product. Now P3 represents, that is the F, that is finished goods holding period. This is being represented by finished goods holding period, right? This is the period during which the WIP has been converted into finished goods. Let's see, P3 is what? WIP has been converted into finished goods, but the goods have not yet been sold, right? We are waiting. The goods are in the process of waiting for dispatch. Okay. After that, what is P4? P4 is represented by D, that is the debtors collection period. This is the debtors collection period. That is the time period during which the credit sales has been done, but the amount is yet to be received from the debtors, right? So this is the P4. P4 is the credit sales has been done, the amount is yet to be received from the debtors, right? And P5 is represented by C, that is the creditors payment period. This is creditors payment period. This is the period allowed by the creditors, period allowed by the creditors, right? So if you talk about operating cycle now here, if we talk about operating cycle, this we can divide it into two parts. This operating cycle, we can divide it into two parts. One is gross operating cycle. One is gross operating cycle and another one is net operating cycle. Other one is net operating cycle. Right? Now, what is gross operating cycle? The gross operating cycle is represented by R plus W plus F plus D. Right? Without considering the period being allowed by the creditors. And what is net operating cycle? It is R plus W plus F plus D minus C. Right? So, what is whatever is the period that is allowed by the creditors, we subtract that, that becomes the net operating cycle. Right? Now, sir, the basic thing we have understood, what is P1, P2, what is R, W. One thing, sir, that we want to know is that in the examination, how to calculate these things. This is what you should be teaching us, sir. Yes, I know that. Right? What is the thing? What is that? How to calculate R, W, F, D, C? We have understood the basic thing that what is R, what is W, what is F, what is D, what is C. We have understood, sir. But how to calculate these things? That is the next topic. That is calculation of holding period. Right? On that, we have the topic is calculation of. The next topic is calculation of holding period. Right? How to calculate the holding period, sir. That is really, really important now. Let's take a very simple example. I'll first take an example. Then we will be able to understand all the things very easily. Right? Then you will quickly remember it. What is an example? Let's say you go to the market and you buy 10 chocolates. You buy 10 chocolates worth rupees 100, right? So what is the cost per chocolate here? What is the cost per chocolate? The cost per chocolate is rupees 10, right? You go to the market, you buy 10 chocolates worth rupees 100. So what is the cost per chocolate? Per chocolate, it is 10 rupees, sir. Now, what you decide? You have decided to consume one chocolate every day. One chocolate every day. Now, if I say calculate holding period of chocolates, sir, मुंह में पानी आ गया सर, है ना? Calculate holding period of chocolates. और आप में से कुछ बच्चे ऐसे भी होंगे जो अभी वीडियो पॉज करके चॉकलेट खाने जाएंगे. सच सच बताना कमेंट करके, सर ऐसा कोई है बच्चा? कमेंट करके बताना जल्दी से. थोड़ा सा हिंदी वाला पार्ट लेकर आओ. Quickly let me know in the comment section if any one of you is right now pausing the video and go to the refrigerator and check for the chocolates if they are there or not. Okay, that's interesting. Now, how do we calculate the holding period? What is meant by the holding period? That for how many days you are going to hold these 10 chocolates? In how many days you are going to utilize these 10 chocolates, right? That is what is known as the holding period. How you are going to hold those 10 chocolates, sir? How will you calculate, sir? You say in terms of value. If I want to calculate in terms of value, right? What you will say? You will say, sir, 10 rupees chocolate, a chocolate worth 10 rupees, I am going to consume it in 1 day. Right? So if I have chocolates worth 100 rupees, if I have chocolates worth rupees 100, in how many days I will be consuming it? 1 divided by 10 multiplied by 100. That is, the holding period is 10 days. I will be holding these 10 chocolates for 10 days. I will be consuming these chocolates in the next 10 days. Right? So what is the formula here, sir, that you have used? Sir, we haven't used any formula. Yes, you yourself has used the formula, sir. What is the formula that you have used? Value of chocolates right? What is the total value of chocolates? That is 100 divided by value of chocolates consumed per day. Now this 10 represents what? It represents the value of the chocolate that you are going to consume in one day. From here, what we are getting is the total number of days, that is the holding period of the chocolates, right? So value of chocolates divided by value of chocolate consumption per day. So based on this only, we are going to calculate all the values. Let's see. Sir, what is this, sir? Sir, this is also something they are known as Capsule Edition. Rest of the things we have already discussed. Okay, calculation of the components. So this is a Capsule Edition by KSJ Teaching, right? I have prepared this Capsule Edition, not available in hard copy. In hard copy, it is available with the sets only, the book set, the handbook trio set. But if you want it in the soft copy, you can get it from our mobile app KSJ Teaching, but it is non-downloadable, non-printable. For view purpose only. If on the last moment you want to revise the things, this capsule will serve the purpose. You can buy it from our at a nominal charges, I think around 300 rupees. The charges are around 300 rupees for the soft copy from our mobile app, right? Okay, so now quickly we'll go through with the components of the operating cycle. The first component is the average raw material storage period. Now this period is represented by what? This is the P1, or what we call it as R in the operating cycle, that period during which the raw material is there lying in your store, right? So he says the average stock of raw material divided by the average cost of raw material consumption per day, right? If on an average in your store you have raw material worth 1 lakh rupees, in one day you are consuming the raw material worth 1000. So in how many days you will be consuming this 1 lakh rupees, right? So you will be consuming it in 100 days. This 100 days shows the holding period, that for how many days you are going to hold this 1 lakh rupees worth of raw material if you are consuming 1000 worth of raw material every day. So what we are taking here is total stock of raw material 1 lakh rupees, and what is the cost of raw material that you are consuming in one day? That is 1000 rupees. It is in value terms, right? It is in the rupee terms, right? It is in rupee terms. Clear? After that, WIP holding period represented by P2 or W in the operating cycle. This shows the period during which the raw material is being converted into finished good. It is neither a raw material now, it is not a finished product. It is in the process of being converted, right? So he says what is the average stock of WIP divided by what is the average cost of WIP per day. On an average, what is the stock that you have? 1 lakh. Right? Now, when the raw material is in the process of the conversion, right, there will be cost. Yes, sir. That is the cost of WIP. Let's say 1000 is on an average the cost of WIP, and the stock of WIP is 1 lakh. That means you will take 100 days. The raw material will be there in the WIP before it is converted into finished product. Now, what is this cost of WIP, sir? What does this cost of WIP represent? Sir, this cost of WIP represents the material cost plus the labor cost plus the overheads that will also be incurred in the manufacturing process. This is the cost of WIP, right? After that, if you talk about the finished goods storage period, that is represented by P3, right? That is represented by P3, or we call it as also F, right? That is on an average, what is the stock of finished goods that is lying in your store, right? Total value of the chocolates divided by the cost of chocolate per day divided by the average cost of goods produced per day. Sir, there are goods worth 1 lakh rupees. Those are lying in the godown, and on an average in one day, how many worth of goods you are manufacturing? You are manufacturing 10,000 worth of goods. That means this 1 lakh worth of goods which are lying in your factory, right? So in how many days you will be selling those goods? For how many days you will be holding those goods, right? On an average, you have 1 lakh in your godown. right? Every day you are manufacturing 10,000. That means you are selling some goods now. So for how many days you are holding this 1 lakh? For 10 days. For 10 days you are holding the goods worth rupees 10,000. That is why on an average you have the finished goods worth 1 lakh. Clear, sir? Any doubts? Now here one thing, cost of goods produced, right? What does it? That all the cost that is incurred, or what is there, sir? Cost of goods produced will include the material cost plus the labor cost, right? Plus the factory overheads, plus you also include admin overheads. Admin overheads related to production. So all these things will be included, that whatever is the cost that has been incurred in the manufacturing of those goods which are lying there, which are awaiting the sale, right? All the cost which is incurred, that is known as cost of production. We have already discussed it in the chapter of the cost sheet in the cost accounting, isn't it? Okay, after that is the average debtors collection period. On an average, what is the amount of debtors that you have in your books, and what is the cost of credit sales per day? Sir, per day you are making, let's say in one day, 1,000 rupees is the sales. 1,000 rupees is the sales for one day, right? So on an average, if you have 1 lakh rupees of debtors in your books, that represents how many days of sale? That means how many, what is the time that it takes to recover the money? That is 1 divided by 1,000 multiplied by 1 lakh rupees, that is 100 days. These 100 days represent the period for which the cost has been incurred, right, on the debtors, on the finished goods, but that amount has not been recovered yet, right? So average trade debtors divided by average cost of credit sales per day. What is the cost of credit sale, sir? The cost of credit sale is the cost of production plus selling and distribution expenses. But one thing another that you have to be very careful about is the word credit sale. If there is any cash sale that is given to you, that is not to be considered here, right? Another alternative here that you will get for this is, instead of cost, you can also take the average credit sales per day. Another way of writing this formula is, okay, I'll write it with a different pen, or you can also write it as average debtors divided by average credit sales per day. Average credit sales per day. Instead of taking the cost, we are taking the full value of the sales, and the full value of the sales include the cost as well as the profit, but more logical is the cost. Why, sir? Because the working capital is required to the extent the amount is invested, right? So what is invested from our pocket? The investment is the cost that we have invested, right? The profit is not invested from our pocket, sir. Simple logic, right? But there can be a question where the cost of credit sales calculation is not feasible. The credit sales is there, so you can directly take the credit sales in that case, right? So I'm covering all the aspects here. So what is the creditors payment period? The creditors payment period is average trade creditors divided by average credit purchases per day, right? So that represents the period for which the creditors are giving us the credit, right? Now this is the creditors average time lag in the payment of expenses. Now when we talk about the creditors, when we talk about the creditors, one second, when we talk about creditors, the creditors can be for two things. Who are the creditors? The creditors are the person to whom we have to pay the money, right? The creditor is any person to whom we have to pay the money. That is a liability, right? The creditors can be for raw material, and creditors can be for other expenses. Expenses can be wages, right? Expenses can be overheads, right? So it is quite a possibility. Time lag in the payment of expenses, what does it represent? That if we are paying the wages or overheads after 1 month or after 2 months, right? That is the time lag in the payment of expenses. Average creditors for expenses divided by average expenses per day, that on an average, if 100 rupees is the expenses per day, you have the expenses of 100 rupees and there are 1000 on an average creditors for expenses are 1000 in your books. That means after every 10 days you are making the payment. The time lag in the payment of expenses is 10 days, right? There will be 100 for 10 days, 1000 collected, then you will pay them, then another 100 will keep on collecting, right? So this is regarding the calculation of all the components of the operating cycle, that how we are calculating the holding period, the number of days, right, for which the raw material is held in the store, for which the WIP. Remember this example, one second. Remember this chocolate example, sir. The simplest way to remember: total value of the chocolates divided by value of chocolate consumption per day. And with everything, if we are talking about raw material, the cost of raw material per day, WIP, what is the cost of WIP per day, finished goods, the cost of production per day, debtors, the cost of credit sales or the credit sales per day, creditors, credit purchases per day, expenses, average expenses per day, right? Now, if I ask you to calculate what is the number of operating cycles in a year, this is another concept, number of operating cycles in a year, right? This is the number of days in a year divided by number of operating cycles. For example, I say there is an operating cycle of 90 days, right? I say that operating cycle is equal to 90 days. Now, I want to ask you that how many operating cycles will be in a year of each operating cycle consisting of 90 days, right? So how will you find out? Sir, 90 days is equal to one operating cycle, isn't it? This is what I was saying. Now, if in a year we have 360 days, in a full year, how many operating cycles will be there? Multiplied by 360, right? So that means this represents 4 operating cycles, right? This represents 4 operating cycles that we are going to have in 1 year. So that is what we are going. So number of operating cycles in the whole year, in 360 days, how many operating cycles we are going to have? That is the number of days in a year. It can be 360, it can be 365, right? Divided by the number of operating cycle in days. In days, this 90 days. This is the, sorry, not number, net operating cycle in days. Net operating cycle. Clear? So this is regarding all the components of the operating cycle. Right, we'll end this particular part here. In the next part, what we'll be doing is, in the next part, we'll be moving on to the estimation of the working capital. Right, estimation of working capital is very, very interesting. Right, estimation of current assets, then debtors, cash in hand, current liabilities will be there. So this is the major topic that we'll be covering it in the next lecture, and we'll be covering it with a lot of examples. I'm not going to cover it directly from here. I'll make you write a few things, right? We'll be covering it with the help of a few examples and try to understand that what is the logic, how we are trying to estimate the working capital. Operating cycle you must be able to understand with. You can go through with this video again and again. If you're not able to understand anything, right, you can post your doubts in the comment section, but most likely the most importantly, what you have to do is you have to tell me in the comment section that what is your feeling on this lecture, right? And if you like it, hit the like button, and all those who will be liking the video, subscribing to the channel, and who all those, very importantly, who will be commenting down in the video, right, all those, they might get an opportunity for the free test series, right? So please do that. That is also a motivation for us, because we are doing this kind of a revision series for the very first time, the extensive revision series of financial management. On your demand only this has been done, right? Otherwise it might not have been planned, sir. But on your demand, so many people were demanding about it, so we have planned for it and we have started it. So see you guys in the next lecture with the next video on the working capital, on estimation of working capital only, right? So see you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.